Welcome back, America, to Sound Retirement Radio, where we bring you concepts, ideas, and strategies designed to help you achieve clarity, confidence, and freedom as you prepare for and transition through retirement. And now, here is your host, Jason Parker.
America, welcome back to another round of Sound Retirement Radio. You're listening to episode number 421. The title is the Market Going to Crash in 2024? But before we get into today's show, I like to start out by renewing our mind. And I have a verse here for us from Matthew 25:25. So I was afraid and went out and hid your gold in the ground. See, here is what belongs to you. Now, if you're curious what the consequences were for acting out of fear, go back and read verses 26 through 30. You might find that interesting. My New Year's resolution is to drop my bad habits, but nobody likes a quitter. No, but seriously, I do have a new exercise routine. I'm starting to do crunches twice a day. I don't know if you know what crunches are, but I'm doing Captains in the morning and Nestle at night. Articles, links, and resources are available at soundretirementplanning.com. Just click on episode number 421. One of my clients recently forwarded an article with the headline that reads, U.S. economist predicts 2024 will bring biggest crash of our lifetime. And here's a quote from that article. He says, "This is the one time I'm telling you, do not listen to your financial advisor. Things are not going to come back to normal in a few years. We may never see these levels again. And this crash is not going to be a correction. It's going to be more like a 1929 or 1932 level. And anybody who sat through that would have shot their stockbroker." Unfortunately, when these types of articles are published, it can cause people to worry and question both their financial plan and their investment strategy. I can say with a fair amount of certainty that the stock market's going to be volatile in 2024. And this isn't because I have any specific concern or worry, but that's because it's how the stock market works. Volatility is normal. The key to being a successful investor is that you have to be disciplined and capable of thinking in terms of decades and not days. A market correction occurs when an index drops more than 10% or more from its last peak. Market corrections occur on average about every other year. The S&P 500 has experienced 18 bear markets from 1926 through 2023. A bear market is when an index drops more than 20% or more from its last peak. Market corrections last on average about 4 months, and the average bear market lasts for 10 months. When an economist or any other investment guru makes predictions about upcoming stock market volatility, I think it's safe to say that they're right. The market will be volatile because volatility should be expected if you're investing. That's just how it works. However, when the headline reads that 2024 will bring the biggest crash of our lifetime, then I think it's worth researching how accurate this particular economist's past predictions have been. And I found an article on thinkadvisor.com that looks at many of this particular economist's stock market predictions from 1999 through 2021. I'll include a link to these articles in the show notes. But one thing that you will find is that this particular economist has made some very bold predictions, very scary predictions about what the future holds. And most of these predictions never came to be. It turns out that his crystal ball is just as fuzzy as mine. Making these predictions might be good for getting sound bites on media outlets and selling newsletters and books, but it has not proven to be a reliable method for making investment decisions. In 2008, this author and economist wrote a book called The Great Depression Ahead. If you had read his book or just the title and it scared you, you could have missed out on the rewards of being an investor from 2008 through 2023. If you had invested $100,000 on January 1st, 2008 in the S&P 500, today your investment would be worth more than $420,000. Letting the bad news pundits scare you out of a long-term investment strategy is potentially costing you more than just peace of mind. If you knew that reading the nightly news might be costing you hundreds of thousands of future dollars, how would it impact what you watch at night or who you listen to? What if these authors, economists, and pundits were stealing your contentment, your joy, and opportunity with their doomsday headlines? How would you invest your attention? When the costs are high, the track record is poor, and the rewards are low, I think it's worth considering a different strategy. The philosophy we adopt, the people we follow, the articles we read, the podcasts we listen to, the sermons that stir us, The shows we watch, the books we read are all influencing the way that we think. And our mind is a mental factory. What we put in is what we get out. We cannot put garbage into our mental factory and expect to get good results to come out. And I'm convinced that if we don't have correct thinking, it will be nearly impossible to experience the outcomes that we desire. Now, I'm not talking about some phony baloney, feel good, think positive thoughts, and the market's always going to go up kind of message. You still have to play defense. You still need to have a good plan. You still need to keep your fees low. You need diversification and rebalancing. And you need to be smart and focus on cash flow and keeping your taxes low. But if you get your philosophy wrong, if your thinking is broken, if you get the foundation wrong, it's going to be very difficult to build a structure that will endure the good times and the bad times. It will be very hard to overcome the anxiety that the world heaves upon us, and it will be difficult to maintain the discipline required to be a successful investor. I want you to have greater independence, rich experiences, and freedom. I want you to have adventures and a long health span spent with people that you love, enjoying great food and amazing places and relationships that challenge and grow you, and where you can serve people out of love. And this all starts with our thinking. As soon as we start down the path of believing that our best days are behind us, when we think that the future is dark with no potential, when you can see all of the risks and problems but none of the opportunities, watch out. We're about to step into an abyss called poverty, where safety is the number one commodity that the brokers of doom are trying to sell. And once you start down this path, this way of thinking, it becomes very difficult to break free from the shackles that will keep you a prisoner in the dungeons of despair. As investors, it's important to remember that the stock market will always have its ups and downs. People say, "Oh yeah, Jason, you're just an optimist." I don't think so. I think I'm a realist. I try to see the way things have progressed over the years, and I believe that people will continue to build businesses and innovate and find better ways to do things going forward. Remember, when you become an investor, you're becoming an owner of businesses that are creating goods and services to make our lives better. Why would you bet against human ingenuity? Why would you think that the products and services we have grown accustomed to would all of a sudden just go away? Trying to predict when the next crash will happen or how long it will last is nearly impossible. And I don't know anyone who has been able to do this consistently and successfully. Instead of trying to time the market, a better approach is to stay invested for the long term and weather any storms along the way. One way you can alleviate the worries of investing during retirement is to diversify your money across time segments. The money you need to spend in the early years of retirement can be more conservatively invested. The money that you don't need for the longer term can afford to have more risk, more volatility, and more upside potential because you have more time before you need those resources. In the Retirement Budget Calculator, we created the Buckets tab to help you visualize what a bucket strategy could look like for your specific situation. 2023 had its fair share of scary moments. Early in the year, we saw the collapse of several regional banks. Russia continued its attack against the people in Ukraine. Then there was the Hamas terrorist attack against women and men and children and families in Israel. We had 4 more interest rate increases by the Federal Reserve, and mortgage rates nearly hit 8%. In June of 2022, inflation had hit a 40-year high of 9.1%, but by November of 2023, inflation as measured by the CPI was down to 3.1%. And we also had several days where we were on the brink of a government shutdown. These headlines were just the tip of the iceberg. But as I was preparing for this podcast episode at the end of December, and even with all the bad news that came to us in 2023, the S&P 500 is up more than 20% for the year. While it's important to stay informed and pay attention to market trends, it's also important not to let fear and worry dictate your investment decisions. As the saying goes, time in the market beats timing the market. In 2024, my challenge for those of you who tend to read these headlines and worry is to write down all of the worries in a journal as they occur. Then, at the end of 2024, go back and review how many of the things you worried about actually came to be. Mark Twain said, "I've had a lot of worries in my life, most of which never happened." Instead of trying to predict when a crash will happen, focus on diversifying your portfolio and having a long-term investment plan that aligns with your goals and risk tolerance and financial plan. Remember that retirement is all about cash flow, not your net worth. Having a solid grasp of your expenses as you prepare for retirement will help you know if you've saved enough to support you throughout your lifetime. It's also going to help you know how to diversify your money across time segments to help you deal with the uncertainties that occur in the short term. In summary, our thoughts and beliefs influence our actions and ultimately shape our future. It's important to have a long-term strategy and to not let fear or short-term market fluctuations dictate our decisions. By staying informed, but also staying focused on our own financial plan, we can achieve financial independence and have a fulfilling retirement. So let's continue to educate ourselves, surround ourselves with positive influences, and trust in our own abilities to secure a future for ourselves and our loved ones. The possibilities are endless when we have the right mindset and we take control of our financial journey. Let's make this a year of smart investing, healthy relationships, and plenty of adventures. Never stop learning, never stop growing, and never let fear hold you back from living the life you deserve. The future is bright, and it's up to us to make the most of it.
Information and opinions expressed here are believed to be accurate and complete, for general information only, and should not be construed as specific tax, legal, or financial advice for any individual, and does not constitute a solicitation for any securities or insurance products. Please consult with your financial professional before taking action on anything discussed in this program. Parker Financial, its representatives, or its affiliates have no liability for investment decisions or other actions taken or made by you based on the information provided in this program. All insurance-related discussions are subject to the claims-paying ability of the company. Investing involves risk. Jason Parker is the president of Parker Financial, an independent fee-based wealth management firm located at 9057 Washington Avenue Northwest, Silverdale, Washington. For additional information, call 1-800-514-5046 or visit us online at soundretirementplanning.com.